right, it looks like just about everybody has joined us today, so I'll go ahead and get started. My name is Jessica Ballard, and I'm with ProfitSense by SageWorks. Today, our host, Donny Shimamoto, will be discussing how to unlock business intelligence in your accounting firm. We are also going to have two guest speakers that will be presenting here later during this webinar that Donny will be introducing at that time. I'd like to run through a few housekeeping items before we go ahead and get started. And Donny, if you'd like to move along to the next slide for me, please. Thank you. During today's webinar, you will be in listen-only mode. You should have received a link on the GoToWebinar panel where you can access a PDF download of today's slides. Feel free to print those off and make notes as needed, or just to keep for a copy for yourself. I do encourage you to ask questions throughout the presentation when one does come up, and we'll do our best to answer those questions at the end of the presentation. And to do this, you're going to use the GoToWebinar panel that you see on your screen, and you can type in the question there. We will have a couple of live interactive polls throughout the presentation, which we do encourage each of you to participate in. Next, I would like to present our speaker, Donny. Donny, you can move to the next slide. Yep, thank you. Donny is the founder and managing director of Intraprise TechKnowlogies, LLC, which is a CPA consultancy focused on organizational development and advisory services for the middle market and nonprofits. Donny is recognized as a national expert in IT management and international author speaker on business intelligence initiatives. Donny is also the chairman of the AICPA's Information Management and Technology Assurance Executive Committee, and he's a former member of its Governing Council and Assurance Services Executive Committee. Donny was recognized as one of 2013's top 100 most influential people in accounting by Accounting Today, top thought leaders in public accounting by CPA Practice Advisor in 2012 and 2013, and he received the 2009-2010 President's Award from the Hawaii Society of CPAs. He was named to CPA Technology Advisor's 40 Under 40 list in 2007 and 2009, and he was also Hawaii top high-tech leader in 2004. All right, Donny, I'm going to go ahead and turn it over to you to begin.
Thank you, and thank you for the wonderful introduction. And good afternoon or good morning, depending upon where you are, to everyone that's over in the audience. One of the things I want you guys to really take away as the wonderful introduction from Jessica is really that I am one of you. I am a CPA. I do have a background both in financial audit and IT audit. But my real passion is really about technology and how we use technology to better provide services to our clients. And my firm, as you saw, is a CPA firm, but our focus really is on advisory services. And while we work primarily within the IT area and provide services within IT, I think there's a great opportunity to leverage business intelligence and leverage the technology to really help provide better services, value-added services to all of your clients. And so I'm really glad to have all of you on the webinar today. Now that you've heard a little bit about me and what I do, we do have some poll questions out there to find out a little bit more about you. So Jessica, if you don't mind sending that out.
Yeah, absolutely. So today, let me go ahead and get it pulled up here. Our first poll question is going to be on what is your primary role? And you can see on your screen at this time. I'm going to give everybody just a minute or two to go ahead and respond. And for those of you that are just listening in, the respective selections are trusted reporter, steward and controller, technical expert, or business partner. I'm going to give it about 10 more seconds as I see some votes are still coming in. Okay, and I'll go ahead and get that closed, and I will share the results, Donny, so you are able to see. We have 19% is trusted reporter, 14% is steward and controller, 14% is technical expert, and 52% are business partners. And then I'm going to do one more poll question, which is, what is your primary service line? And are you in audit, tax, consulting, or client accounting? I'll give everybody here just a minute to go ahead and get that answer. All right, just a couple more seconds. So if you haven't answered, please do so now. Okay, and I'm going to go ahead and close that. And we have 5% that are in audit, 33% in tax, 31% in consulting, and 31% in client accounting. I'm going to go ahead and close that and turn it back over to you, Donny.
Great. So it sounds like we've got a good mix of people on the in the audience today, which is good. And we've got our two guest speakers as well will help to actually build out some of that, the different perspectives, and that's why we've asked them to be on. So let's jump into what we're going to be looking at today. So today our real thing is unlocking business intelligence. And the concept of unlocking comes because there's a lot of data that all of us have. And particularly as CPAs and accountants, we actually have a lot more data at our fingertips than a lot of other organizations. So really what we're trying to do today is to really look at how do we take this data and turn it not only into information, but really into insights so that we can have an impact on all of the businesses that we're working with, whether it's our clients or whether we're serving an internal role. And I think of client accounting services often serving an internal role or an external role, client accounting services serving an internal role as an external entity or as an external person for your clients. So how do we take all of this information and data that we have and really help to add value to everything that we're doing? So we're going to start off with really how do we add value with business intelligence? Why should I do it? What is it? And what are some of the tools that come into play as we start to look at business intelligence? Why is this coming up again? Then we'll move into a little more beyond the role of accountant. So we're starting with a broad area, and then we're going to say, okay, for all of us on the call today, or on the webinar today, what is really our role? Why are we doing this? Why isn't this an IT thing? So we'll look at how our role as accountants are changing and how the role of the accounting function as a whole is changing. Once we understand what our role is, then we'll come and look at the business intelligence again, and how do I take my new role and how do I then incorporate business intelligence and the technologies into what we're doing? So we'll look at adding business intelligence into core services and then a lot of the benefits of what's happening when there. And I'm going to be giving you a lot of the theory and tactical on how you actually do this. Then we're going to actually switch off and we'll have John and Mike actually come in and show you some firms that have actually done this, and some of the changes that they've seen in the way that they work with their clients and the value that they're providing to their clients.
Donny, before you
Again, at any time, feel free to shoot any of your questions over into the chat boxes. Great to ask questions along the way, because as you can see from the agenda, we build as we go along.
Donny, can you hear me?
Yes.
Can you please make sure you're sharing your screen? I don't show the slides on there.
Oh, is it really?
Yep, you may have just hit it off. That's okay.
There we go.
Thank you, and I'll go ahead and get that hidden.
Great, thank you. All right, so let's start with adding value with business intelligence. We're going to hit a bunch of the points, and you see them in the slides here. So let's jump into really what's business intelligence.
Donny, try that one more time.
How's this? Are you? So you should be seeing now the what is business intelligence on your screen. Is that coming out okay?
No, I'm viewing the waiting room at this time. You have a blue button that says show my screen at the top of the GoToMeeting?
Yep.
Okay, can you click on that?
Great, let me come back in to that. Okay, I'm showing it as on air and showing the application.
Okay, let me do that. Okay, Donny, try that one more time for me. There you go.
There you go.
Yep, we are good to go. Thank you.
Great. All right, so let's dive into what really is business intelligence. So business intelligence really is this whole collection of all of these different things. It was really the buzz pretty much 10 years ago. And 10 years ago, everyone went and jumped on the bandwagon. So now, as you can kind of see from the graphic here, we've got all kind of different technologies, all kind of different things going on. And all of this really is what people are calling business intelligence. So really, what do we have here? We've got data warehousing. That definitely goes back quite a bit. Tied onto that, OLAP is our online analytical processing. Those two are really big, actually more in the 80s and 90s. Business analytics is one of the big words right now in terms of what's happening in the business. How can we understand what's going on in the business? As we understand what's happening now, we move into predictive analytics over on the right side. Well, based upon what's happening now and what we think is going to happen, what will then be business results? A lot of that is communicated through the dashboarding technology, and so that we can get quick high-level views, broad perspectives on what's going on in the organization. That also drives the need for real-time analytics. That's where we're looking at something's happening now, really in real time, what's going on, so that we can start to detect things before they become a problem, start to take actions and see the impacts. One of the other big things is visualization, where I'm taking data, and as accountants, we're all very comfortable looking at a bunch of numbers on a spreadsheet. I think we often forget that other people really want to see it more visually. So beyond charts and graphs, really looking at other types of visual presentations. Infographics is a very popular word right now, where visually you can see, even sometimes though it's words, you can see things in a visual perspective and understand their relationships. And big data has been the latest buzzword to come along that's really said, we've got this ton of data, what are we able to do with it, how can we process it? New technologies have come along. So take your pick, anything within here, all of that is business intelligence. And so what do we really want to do with all of this? Well, it really depends upon the different points that the organization is in. You'll see from this graphic that we've switched to now, on the lower axis, we've got the level of ambition. So how ambitious are you being? What are we trying to do? How much of an impact are we trying to have on the organization? Compared to our y-axis, which really looks at how much value are we adding? Well, with the recession, all the past things going on in the economy, a lot of people were focused on the most inner circle, this efficiency concept. Are we doing the right things? Have we minimized our cost? Have we actually focused on ensuring that we're getting the most bang from our buck? Well, a lot of times this cost minimization strategy will work in the short term, but it really doesn't help the organization grow. So from that circle, we need to look at the next circle out, effectiveness. Are we doing the right things? Are we getting ready and optimizing a lot of what we're doing? Not just to make it efficient, not just to reduce cost, but overall managing risk, overall looking at and taking enough risk that we can then have some greater benefits. Because as we all know as accountants, a lot of times, especially in the investment world, greater risk, potentially greater returns. And then we balance that with a lot of the controls. So that's that whole effectiveness concept. Are we taking the right risks? Are we mitigating it to ensure that we can realize the benefits? And then we may also want to look at really the largest circle there, which is really looking at innovation. How are we transforming the way that we do things? And one of the great things about our profession as accountants is that we are going through a great transformation right now. We're going through a period where we now have an opportunity not only to be focused on cost cutting, this efficiency, but how can we really start to help transform our businesses or help really enable our businesses to be more innovative. Whether we're working internally in a controller or CFO role, or whether I'm working externally as an audit, as a tax person, or as an outsourced controller or CFO. What are we doing to help enable our firms or our organizations to really do new things? As you can see from the various axes, that's definitely one of the more ambitious things, and it's also a lot more added value. So really where the question is, as you look at each of your clients, where are they within this structure? Depending upon where they are, that's where we may bring in different techniques and different business intelligence tools. Now, one of the other things that, especially as accountants, we get criticized on is that we're too focused on the numbers, too focused on the dollars. And if you look at this survey, and this comes from one of the AICPA CGMA surveys, it's really looking at non-financial assets, this concept of intangibles. This has been talked about quite a bit, right? Financial statements do not adequately represent the positioning of a company, the true value of a company. There's a lot of intangibles. So you can look at this graphic and you can really see here quite clearly that 68% of the value drivers within an organization is really coming from the non-financial area. It's really about customer relationships. It's about the knowledge and the human capital within the organization. And third in here is really the technology. How are we leveraging the technology to really innovate or to really optimize what our organization is doing? So we've got a lot of non-financial in here that we need to start looking at as well. So my charge to a lot of you is to not only focus on that financial, excuse me, and you can see the financial down on the bottom end, it's only roughly one-third of the value that you can help provide. Why do we want to do this? Well, this is really a shift in our sustainable value chain in the way our organization operates. The challenge that a lot of organizations are going through now, especially as we're going into a recovery, is how do I still make obtain the most value for my dollars? How do I invest in my organization to ensure that we are able to grow and grow in the right way? Now, we're not just throwing money away, grow in the right way to ensure longer-term success. And that's really going to be about looking at how do we balance both operating efficiency, a lot of times cost management, with our longer-term prospects and strategy of where we want to be. And you can see that those two sometimes are almost mutually exclusive, and it's almost this seesaw. That's why there's a little triangle on the bottom of this graphic. It's almost a seesaw where I'm going to try and balance the two. How do I really work with customer satisfaction and retain those customers? I'm actually going to work backwards. How do I bring in new customers, and how do I actually work with them to retain them and ensure that they're satisfied? How can I work with my vendor supply chain and optimize that, while at the same time ensuring that I have capacity for growth and that they can respond if there's change in the market? How am I delivering and developing new products? This is where you can see we have both an efficiency component or optimization component where maybe I want to optimize what I have, or maybe I need to be more innovative and really look at the longer-term prospects. How does that all tie in the end to my brand and all of my marketing positioning? And what is our strategy for impacting everything else that we've just kind of talked about? What is the context for our strategy? What do we think the market and our customers need? Now, I know a lot of you are starting to think, well, that's not my job. We're the accountant. We're really just about tracking the numbers and making sure that everything is there. Well, one of the great roles that we play is the accountant or the accountability role. It's about really looking at all these things that the organization wants to do and figuring out, okay, how do we account for that? How do we know that we're making progress? What non-financial indicators do we need, for example, to show that we have high customer satisfaction? Are we going to gather customer satisfaction metrics? What metrics are we going to gather? How do we do that? And how do we know that the metrics that we're gathering or the data that we're gathering is actually valid? Well, we can apply a lot of the techniques that we learn in audit to validate those data. I think of that as information assurance, and it's provided on an internal basis. So there's a lot that we can do throughout this entire value chain, and we're not so much the ones driving a lot of it, so much as holding people accountable and helping people to measure and report on a lot of what's happening. Our goal through this, and this is the bottom slide, is really about better information, that we can help provide better information to support better decision making, which then enables competitive advantage for the organization against its competitors, and that in the long term enables the organization to be more sustainable. So that's really how our role is really starting to reach everything across this value chain, not just only in the finance area. So as you saw on the previous slide, one of the ways that we can do a lot of this is through our business intelligence tools. And the immediate pushback that I get is, well, that's an IT thing. Well, IT has been trying to get business intelligence to be successful for the last 6 years, and they've had moderate success, maybe even low to moderate success. Why? A lot of times the issues is with the data that's in there, the reliability of the data, and a lot of times the business context is missing. The challenge for the accounting side is the technology itself. So let's take a look at the evolution, and I'll show you why I think now accounting can actually help to manage a lot of this. So back in the 80s, we started off with the data warehouses. The purpose of the data warehouses was really to bring data from all of these different systems that we've got operating over into a central database. It really required a lot of IT involvement. They had to prep the data, they had to load the data, they had to build all the queries and reports out for us. From there, we went into the data marts. The data marts are an additional layer on the data warehouse, and what they do is provide a lot of standardized analysis. So all of the things like the ratios and things that we all love, we build those into the data marts. It automatically computes it once I load data into my data warehouse. This still involved a lot of IT involvement. They had to set up and load the data marts. Reports, on the other hand, were allowed to be user-driven, so we gained a little bit of flexibility there. Those data marts, as the technology got better, moved into the OLAP cubes, or the online analytical processing. These can be layered either on the data warehouses or on the transactional systems themselves, so I can put them directly against my GL, for example. These still have to be set up by IT, and they required specialized training. So it wasn't like this was something where we could get rid of IT yet or people could operate independently. This was still sort of a specialist kind of an area. Then in the early 2000s, and I mentioned this is the last time we saw a big boom, was the early 2000s, was where we really started to see more packaged software come out for business analytics. Hyperion and Cognos are probably the big names that a lot of people are familiar with, but during those times there was also OutlookSoft, TM1, Clarity Systems, a bunch of different players all coming in, all had their own different database backends, and these were again layered over these data warehouses and data marts and cubes that are already existing. The nice thing about this was, while it originally required a vendor or IT to set it up, after it was set up, users, a lot of times finance users, were able to actually then do the data load, do a lot of the querying themselves, and do a lot of reporting. So it wasn't necessarily the low-end user, but someone who was very familiar with working with, for example, spreadsheets, could start to understand how to actually work with a lot of that data. Since then, or over the course of the last 10 or so years, we've seen a lot of different things also start to come into play. In-memory processing, as a lot of our servers became more powerful and even our workstations became more powerful, we saw increased efficiency and speed in actually doing these analysis. So I didn't have to submit my query, wait for a couple of hours, and then I get my report back. A lot of it could be done on the fly now. Social media was the big thing that came through, and the need to analyze that. So social analytics and relationship analytics, that started becoming very popular. Cloud computing really came in, and even within the business intelligence area, provided now turnkey solutions. If we go back to the previous slide, you remember that I said IT still had to set it up. But with cloud computing, it was already set up, and all I had to do was purchase the software, and I could start running with it. Other great thing that this brought in was it brought it down into the small and mid-market area, where I could start to make it more affordable. I could purchase it, and as my organization grew, it could actually scale with me. Now the big thing is mobile, and mobile BI, or mobile business intelligence, really is about, even potentially from your phone, being able to grab data and grab analysis and perform reports and look at things on the fly. Sometimes when I'm out at a client's, or when I'm out with my customer, if I'm from the organization. So mobile BI is definitely the big thing now. Mobile everything is the big thing now. And then of course our latest buzzword, probably within the last 2 or 3 years, has been big data. Well, just because the tools have started to evolve, the volume of data has also been increasing. And it's not increasing linearly. You'll see here it's increasing exponentially. So it's really a curve and an increasing curve of data that we're dealing with. And that posed problems. A lot of the systems couldn't handle that. Well, in the last couple of years, we've had this Hadoop algorithm that really has allowed us to work with the volume of data and start to really iterate through that data and make it very efficient. So no longer do I need a supercomputer to process all of this data, but I can do it even potentially on my workstation. So the technology has really come along. And big data, because of its focus now, because it's the big trend or buzzword right now, and the challenges here additionally is that data could be unstructured. So structured data, you can think of anything within a database. Our GLs are structured data where I can clearly define, here are my data elements, here are the different fields, or here are the different data points. The unstructured data starts to get into video and audio and a lot of text, things that will provide more information. If I were to do the analogy to financial statements, our unstructured data, the structured data is our actual financial statements, profit and loss, balance sheet. Unstructured is all of our disclosures and all of our notes that accompany the financial statements. There's a lot of good information in there, but it's not structured. It's not something where I can say, well, query it and do any type of analysis, direct analysis necessarily. I already mentioned that with big data, it's about this large, and traditional database tools really are not sufficient. And the other thing is this whole concept of relationships, that how do I really understand all the different things that are, for example, related to a customer, their satisfaction index, what the wallet share that we have from them is, what is their traditional, what percentage of spend do we have, how is their spend changing with us, a lot of different relationships. Other big thing with big data is not just transactional data. Now we have this concept of observations, which sometimes is external. We have the concept of events. Think of each mouse click on a web page, potentially an event. What did they do? They went on this button, and all of these interactions. And then the variety of devices, whether it's a phone, a tablet, even potentially a kiosk. We have a lot of kiosks where you can just touch the kiosks. Those are all different devices, and I have to gather data from all these different devices. So that's why big data really has been a challenge. But all of this really comes back to, I don't just need information, but I need some insights. I've got this ton of information. What's really the important piece? So with all of these changes, what has really started to happen is that the person purchasing business intelligence has changed. Not traditionally, it's always been IT. And as we went through the evolution, you heard where IT was involved in a lot of things, and thus IT drove a lot of that purchasing. Now instead, it's really the business, and often accounting or finance is one of the first customers that starts to purchase these BI tools. That's where it's even, the change has been from very large vendors into smaller and fast-growing companies who are able to quickly change and adjust to what people need. The user interface one is also one I'll highlight from here, where we're moving more from reports and key performance indicators, more structured, regular reporting, into more visualization, that graphs, the infographics, the different things. So there's a lot of different factors coming in, but big one here, the business is now driving a lot of this purchasing, and accounting is a great part of that business driver. So as I look at the different tools, and we could spend 2 or 3 hours just looking at the tools, there's a lot of different things that we have to think about. But I wanted to highlight from you, and this is actually available in the white paper that SageWorks is going to be making available. This is in there. This is how you decide on what BI tools you want to work with. First, start with data accuracy. What does the tool have in it to really look at maintaining data integrity, maintaining data reliability, accuracy, completeness, these things we love as part of the audit. We need to make sure that the tools help us ensure that the information in the system is actually accurate and complete. Second, data relevancy. We all have pretty good access to the financial information from the general ledger. Well, how do I take that and combine that over with our non-financial information? How do I actually look and determine what information is relevant for a given decision that I'm trying to make? Sometimes it might be book, sometimes it might be tax, sometimes it's neither, and maybe I need to go look at some other area or some of the other systems to figure out what's happening. From there, I really look at the concept of context. Does the tool really allow me to provide context? What is the interpretation of the number? Does it help to highlight what the insights are and what are the necessary actions that need to occur? Another thing that provides context is benchmarking. How does what we do or what we're doing compare to our peers, whether that be peers within the same industry, same size of company, same geographical area? Whatever really makes sense for your organization or for your clients, that's really where you want to put context around the numbers. Then I want to also look at presentation. I mentioned from the last slide, visualization has been a really big push. And that's where the use of graphs, charts, and infographics, things that other people, other non-accounting people or non-finance people will be more easy to relate to and more easy for them to understand. So think about the presentation and what the tool allows you to do with regard to presentation. And all of this probably sounds like a lot of work. It potentially is, so that's where our last one here is really about efficiency. How can I really take the concept from our transactional systems of I want to input data once and I want to reuse it? How can I load data once into our business intelligence tool and then reuse that in different ways, or have access to that whether it's within the organization or among different clients, so that, or among different team members, so that we can use the information for different clients. So that's kind of the highlights of how you actually decide which tool you want to look at, and there's definitely a wide variety of them out there. So why do I need that? And why should we as accounting be interested in this? Well, fewer than 1 in 10 executives actually receives information when they need it. I think a lot of this resurfacing of business intelligence is a call for those of us that are, as accountants, to go back to our roots, which is decision support. Executives want more information, want better information for how they actually make their decisions. And you can see here, 46% say, almost half are saying that they're having to wade through these huge amounts of data. Well, that's that whole business intelligence issue. That's the whole big data issue. We've got the technology now that helps to solve that. 56% are also concerned about making poor choices because they have faulty, inaccurate, or incomplete data. On the last slide, we talked about how we as accountants can help to put into place controls that help look with our internal data at the accuracy, completeness, precision of all of that data. So the two big data points here tells us that we as accountants need to help with this. There's also a greater need for better and more timely access to information. So previously, if we waited a month, that was fine. In today's world, it may be a day or two that I have to respond to a business event, and I need to be able to make a decision quickly. I need to be able to get access to that information. So that's why the access to information, timeliness of information, and ease and efficiency, those are some of the criteria we want to use for these tools. So all of that you heard me leading up to, what is then our role? So we're going to take a step away from business intelligence for a little bit and really look at our role as an accountant. Our roles have evolved quite a bit. And unlike before, where I could be an accountant and know everything that there is to know, that is increasingly changing. So now with our spectrum, we really now play a bunch of different roles. We could primarily start off in the trusted reporter down in the lower left here, and from there we normally will evolve. So trusted reporter, you see tax, Sarbanes-Oxley, and internal audits. We've got the audit things going on there. The move into the business and industry area normally takes us upward into stewardship or controller. And as I move truly into a CFO role, I'm really looking at corporate governance, the application of ethics, and more integrated reporting, sustainability, greenhouse gases, those sorts of things come into play. Another path I could take from the trusted reporter is over to the right, where I'm now becoming a technical expert. Am I actually delving more deeply into any of the different areas? And you see business intelligence analytics being one of those potential areas. What we really want to start seeing more, though, and what business is calling us, CEOs are calling us to do more, is really be more this business partner. How do we actually help manage the performance of the organization? How do we tie a lot of the metrics and information that we're tracking back to the business strategy? How are we managing the risks that the organization takes, and how are we actually managing those risks so that we can enable maximize the realizable benefit? And still in here is a little bit of the cost control, but you can hear it's a lot more value focused. So let's see what you guys think your role is. What are you guys doing? What is your role within the organization or for your clients?
And so, Donnie, I had asked this one originally instead of the other role question, so I'm going to go ahead and give you the results for this.
Okay.
We had 19% that reported as the trusted reporter. 14% said they were steward and controller. 14% had said that they were a technical expert, and then 52% reported they were a business partner.
Well, excellent. So we've got people all across the spectrum, which is generally what we really expect. Great. So the reason that that's really important is then to understand where you play in this evolution of the accounting function. So really, this is the different stages of growth that we see within an accounting function. Often, and the criticism that we get as accountants is really that we're bean counters, that we're really only focused on the transactions, and that we're not really looking at the bigger picture. When we're working within this transaction management area, really number of transactions becomes the issue. Technology has really started to help us fix this problem by having the systems do a lot of the transactions, recording a lot of the transactions, and recording transactions at a detailed level. As we progress, then we really shift into this role of controlling the business. How are we actually now more process managers? And you can see from the processes that we're managing, it's still very much in our comfort area. It's about accounting, whether it's management, internal reporting, working your tax or audit, or doing more treasury management functions. When we shift into this role, we're really about consistent process excellence, that we're consistently executing processes, and that we've got the right controls in place to really manage that. So you see at the top, we're focused on process and risk minimization. As we continue on, this is where we really want to look more at planning and analysis. Software coming into here is really more our budgeting and forecasting, so corporate performance management. What's going to happen? You can see the shift at the very top. We're now focused more on decision support, where we can start to do analysis of what's happening, what's going on, what are the implications of a particular decision. What we should be moving toward, and it sounds like a bunch of you are here in the business partners areas, where we're looking more at value. How do we ensure that we're making the right investment decisions, balancing that risk, looking at our risk portfolio, and how do we continue to support value and wealth creation, depending on the type of business we're in. This is also where we're seeing more CFOs called on to do business development, where it's go along with the CEO and really help to look and work with the customers, and in a sense also provide customers assurance, not assurance that we think of as a CPA. This isn't an audit report, but assurance that the company has good financial health and that the company is actually moving in the right direction. So managing those risks and really helping to play more of a value-added role. This is the evolution that we normally see in the accounting function. So realize that there are these steps that you kind of go through. You can take a look at where you are or what your relationship is with your client and really start to say, okay, how do I take this to the next step? What this all plays back to is really our overall role in achieving impact. How do we help really have an impact upon our clients, that we're not just performing, for example, a compliance function. A lot of times we start on the left here where we're doing a lot of data capture, we're helping reporting, and we may do some analysis. So we may, for example, do some racial analysis. That's often where technology will take us. What we need to do is really start to look at how do I take it to the next step? How do I start to add insight? What is the analysis telling us? What does it tell us we either need to do or stop doing so that we can really have an impact? And you can see from the left side that this is our comfort zone, but there's more value provided over to the right. So it's really a shift in the way that our role is and what we're doing. What we need to do is really help people turn data more into insights so that we can then drive action. And you can see from this graph that this ability to translate these insights into action, that is a huge competitive advantage. The yellow bars are the underperformers, the red bar of our outperformers, meaning they're exceeding their budgets, they're exceeding expectations. Huge advantage you can see here, and most of these are essentially double performance by going and taking that additional step of insights and making sure that turns into action. We also have to remember that after the actual decision or action is taken, we need to continue to help measure that impact. We may have all these grand plans, we may want to do all these things, but if we don't see it all the way through and say, well, what actually happened, what impact did we have, it's almost like saying, well, we created a budget and then we throw the budget away and we're not going to come back and look at it and say, did we actually do it, did we actually achieve what we set out to achieve? How do we know that we're achieving our goals? So that's where we need to make sure that we're continuing as accountants to be involved all along the way. So how do you get involved? This is how you incorporate business intelligence over into your services. there's this concept of the business partnering maturity model, and you can see that as we go through the different stages of data capture, reports, all the way to impact, you may play a different role in working with your clients or your organization. If you're just a helper, then you're kind of operating at the lowest level, and you can see the different things there of what you might be doing in a helper role. If you're currently at a helper role, your next step is to go and see how can I change into more of a supporter role. And you can see the different things you're doing there in each of the categories. If you're already in supporter, then your next step is to look at partner. How do I move into more of a partnering role with my customers or with my clients? And this is not only with customers and clients, it may be within the organization to say, if I'm in finance, how do I better support or partner with other departments? So that's the way you use this, and this is just to give you a different idea. You can also, if you're, a lot of you are in the public accounting side, so from there, if you're doing assurance services, the things that I've seen done, doing benchmarking for financial ratios, providing standard analysis by industry or peer groups, especially as you can gain insights, having worked with all the different clients that you have. Provide some advice on cost cutting, or risk reduction. What have other clients been doing? How can we see these things play out within your client? And then advice on cash flow management. We know, especially in the small and mid-sized business, cash flow really is king. So how can we actually do that? How can we help manage that better? From a tax perspective, also benchmarking. There is software now that helps you to benchmarking to determine whether or not your client is maximizing their tax deduction, or I shouldn't say maximizing, but how do they compare to other peers within the same industry in the way that they're using tax deductions or taking tax deductions. So we've got those types of analysis. And if you're doing client accounting services, you can actually do any or all of the above. Plus, you can provide ongoing management decision support. Notice I didn't say management decision making, because of course we don't want to bridge that independence and objectivity, but really it's more about decision support. So if management is thinking about doing something, how do we continue to really look at that? So another poll question for you. Which of these kind of makes sense? What do you think you could actually do?
Okay, let me go ahead and get that pulled up here. So which of the business intelligence services do you currently offer? We have benchmarking for financial ratios by industry or peer group, advice on cost cutting or risk reduction, advice on cash flow management, benchmarking for tax deduction by industry or peer group, and then ongoing management decision report or support. And so I'm going to go ahead and give everybody just a moment here to go ahead and vote. Okay, we still have some responses coming in, so I'll give you just a few more seconds here. All right, it looks like we have those in. It looks like we had 26% for benchmarking for financial ratios. We had 16% that do advice on cost cutting or risk reduction, 11% on advice on cash flow management, 8% for benchmarking for tax deduction by industry or peer group, and then 39% for ongoing management decision support. Donny, I'm going to go ahead and hide this, and then I'm going to ask you to show your screen again. For some reason, when I'm doing the poll questions today, it keeps taking that down.
Okay.
Thank you.
Great. So it's great to hear all of you doing some of that. And if you're thinking about doing any of the other ones, or if you haven't started yet, then this is really where the way to do this. Start with a pilot. Develop a business case. What you're going to do is look for clients where you can help provide value, that these insights would really help them. And you're going to want to take a look at the clients that you have a strong relationship with. This will help reduce your risk of actually having creating kind of a snafu or a reputation impact that, oh, they tried to sell us this thing. Work with the clients that know that you know trust you, and that you also have a strong relationship where, hey, we're trying out this new service, we want to work with you, we think we can help add some value to really what you're doing, and we want your feedback. Help us determine whether or not this is helpful or not. With that feedback, you would then go and refine the way that you're approaching this. The other thing that you need to do is really look at the benefits to the firm. If you're doing it right, it should actually generate additional revenue. It should cause them to ask you to do additional things for them. Because as you especially move into that decision support role, especially as we're going into a recovery, we want them to see, hey, I'm thinking about doing this. Well, let's run it by our accountant to make sure that it makes sense or to figure out how we might measure our success. What this will also do generally is help to draw new businesses your way. Think of it as, I'm thinking about doing this, and this is these are the business owners talking to their friends. Oh, we ran it by our accountant. They were helping us do this. Maybe you want to talk to them because your accountant doesn't do this. As you start to become more integral into supporting those decision-making, that also increases that stickiness or that retention of that client, because it makes it that much harder for another firm to come in and say, hey, we can do the same thing. Well, are you just providing audit or tax services, or are you really helping me make sure I'm making the best decisions for my organization? So you can see where there's some definite benefits to the firm. And with that, I actually want to pass it over to our two presenters. So I'm going to first go over to John, and he's going to help us from Anton, Collins, and Mitchell. And John, I'll actually let you do a quick introduction of yourself and your firm and what you guys are doing.
Hi, my name is John Valley, and I'm the nonprofit audit manager in the Denver office of Anton, Collins, and Mitchell. And we are about 110 people strong in 3 different offices in Colorado's Front Range. And my background specifically is I've worked in public accounting for about 10 years. In the middle there, I took off a couple of years and worked in industry for a while. And one of the things that we try to do within our client base is regularly use benchmarking and trend analysis tools to assess the business situation that our client is in, and also communicate findings in a clear and understandable manner. There's not a lot of our clients are really able to do it for themselves, as we've talked about here today. And on the next slide, I'll talk about our very first client profile and some of the services that we provide. So we have 2 case studies for you here today. The first one is a construction company, and they are a large general contractor which is locally based here in Colorado. They do commercial and retail new construction throughout the United States. They do big box stores, they do some small retail, even some schools and auditoriums and things like that. The annual revenues are $125 to $150 million, give or take, any given year. They sought us out first to provide audit and tax compliance services, and then we sought them out as well as they seeking us out for consulting services. Now, the next slide here, we talk about how we add value to them. Well, we helped with preparation of 5-year trend analysis and benchmarking of key ratios and percentages. And the benchmarking data, we use comparable size entities and specialties because there is some segmentation within the general contractor and construction fields. Pardon me. And we do that by utilizing peer groups, obviously. Our client has great data tracking, and so we can track that along the financial ratios according to peer groups. And within that data that they have, they didn't really do much in the way of analyses. And so then we help them disaggregate that data and kind of do a deeper dive, including gain phase analyses, which are profitability metrics at the final phase of the project when it's complete versus interim periods. And the reason that we do that one specifically, it helps find operational issues. Tell them when a project falls off track and helps identify why a project falls off track. Either potentially the project manager, weather, faulty blueprints, maybe it's an estimation issue. We also help slice and dice by project manager, region, job type, such as big box store, small retail, the subcontractors used, et cetera, and many other data points. And we do that to help them draw correlation to find root causes. And if we can find those causal relationships within that data, that's where we feel that we really add good value. Because we can find that certain project managers are better on some types of projects than others, and help them therefore make informed decisions. They bring in new projects, who are they going to assign those projects to? Project Manager A, better with the big box, this is a small project, maybe it should really go to Project Manager B based on the history. And then we help facilitate lead brainstorming sessions of the application for that information that we help derive. And another good example of what we do is we look at central office oversight of project managers, because how does the central office manage those people? When do they communicate? The frequency of the communication? How does the communication occur? Does it happen alone with one-on-one scenario with the project manager? Or is it somebody in the company meeting with all the project managers in a group, or maybe at a regional level, et cetera? And they came up with some recommended changes. And in this case, the recommended changes were to have the project manager meetings no longer be individual meetings, but be as a group. And one of the reasons that the group is thought to be more beneficial is it helps encourage collaboration amongst the project managers, and also helps encourage problem solving. You know, if one person has great expertise in one area, that person can then share that with somebody else who's having a problem in that area, where they otherwise may not talk if that expertise doesn't go across project managers. And that approach also allows for peer pressure to perform, because people, obviously, in human nature, are always not wanting to miss the expectations of a larger group. When it's one-on-one, it's a slightly different story, but a larger group, people tend to do that. And if we think about the accountant's role in achieving impact, you know, we think that gets us into the influence role. Then going forward on this specific client next year, we'll be able to measure the impact of that, and hopefully have an increased bottom line and probably some employee satisfaction based on the example that we provided. Our next slide has the background of the other case I wanted to bring to your guys' attention, and that is a governmental industry client, so local city, if you will, with a total population of about 50,000 people. The city provides multiple municipal services. Not only the general government, it provides utilities, provides police and fire protection, et cetera. And the services that we started providing to them were financial statement audit and compliance audit services related to federal funds that they receive. And they had a pretty good, sophisticated accounting and finance department, but they really focused on the day-to-day operations and some very typical or more standard reporting. And so the value-added services that we provide are preparation of 5-year trend analyses, including benchmarking of key ratios and percentages. Some of the benchmarking data is assembled internally from us through annual surveys of our clients, and also through Profit Sense and some other tools that we have available to us. And we do that, and we identify 15 key ratios that really work for them and really matter for them. And the reason why, or the questions that we answer, or the questions that we ask even, are, have you ever looked at yourself over several years? You know, what's your spending per capita on things like public safety, fire, police, debt carrying costs, et cetera? And help identify a sister city, if you will, so we can compare to one city to the other, has similar services and of a similar size, and run those comparisons. Because one thing that you find is across all industries, no two cities provide the exact same services, the exact same population. And a good example would be in Colorado, a lot of fire districts are separate from the city, but within the city of Denver, the fire department is just a department within the city. But Denver doesn't provide any water. That's an outside special district that does that. And so when we do identify a sister city, we run all the same comparisons per capita and a number of other things, including the analysis of deferred maintenance and significant, I should have stopped there actually, the analysis of deferred maintenance, where we look at asset aging, replacement, forecasting, cost. And then we also provide bond analyses, which is really based on a credit rating analysis. You know, we look at other municipalities with similar credit ratings, how their financial ratios compare, and also how does that compare to their peer group of cities, and then also to the overall bond market. And it really just creates awareness in the finance team of really how they can help manage their costs, improve the overall management of their debt, and then map out future payments and cash flow forecasting. So they can see when a big payment is due, when it might be time to start refinancing, either based on fluctuations in the market or based on internal factors and maturity schedules. And when we have that awareness and we can bring that information to the management of the city, then that then allows us to bring it to council members, particularly during the annual budgeting and forecasting process, in a concise and easy to understand manner. So instead of looking backwards trying to predict the future, we can help bring what the future is to them in terms of their debt and what their comparable city towns are doing. And that is the last case that I brought with us. And my contact info is on this last slide here if anybody would like to reach out to us. Thank you.
Okay, I think I'm on. This is Mike Smith here. Hello, everyone. And it looks like I only have a few minutes, so I'm going to try to talk through these slides really fast. You can switch to the next slide, Donnie. So, quick overview. I partner with McGladrey in our consulting group. We're the 5th largest CPA firm in the country. And although we're a large firm, I spend most of my time working with smaller businesses, owner-managed, closely held companies. So the example I'm going to talk about is it's a much smaller company. I'm going to skip over a lot of things because I think it's sort of redundant with some of the things Donnie and John already covered, and just try to get through this real quickly. But this particular client, they've got annual revenues of between 5 and 10 million, and what's interesting is they left their current service provider because they just really weren't getting any attention. There wasn't a lot of interaction. It was more of a pure compliance function. And when our firm got hired, we've been able to really develop a strong relationship, and I think a large part of it has to do with sort of getting outside of that accountant mode, as Donnie had mentioned, and being more forward-thinking. And it is getting out of our comfort zone. And I think that's part of the challenge with all of this, is our profession is changing, and we really need to be able to become more consultative and be less technical. And I just think that's a challenge for our profession. But I think that's one area we've really been able to add value to this particular client. Their structure, just in terms of their accounting department, which isn't uncommon with these smaller businesses, is that they had a business owner who also was the president of the company, and then a bookkeeper, and there's really nothing in between. So it's hard to get any meaningful analysis when you've got a business owner that's very technical and focused on the core business and doesn't have the accounting and finance background, and a bookkeeper that's really just keeping the numbers and reconciling the bank account. So that's where we've been able to add a lot of value at the end of the year, making sense of the numbers and doing some analysis, both historical and against industry information, which has been really helpful. So, Donnie, you can go to the next slide now. A little bit about the services that we deliver for this client. Initially, it was just the core compliance services and reviewed financial statements, corporate tax returns, individual tax returns. And our whole goal is to not be viewed as our client's accountant, but their trusted business advisor, which I'm sure is common to a lot of the folks on the line right now. So in order to execute on that, we need to do good work in the compliance area. It's important that we get things right, but more importantly, we need to be able to add value outside of the compliance, and we've been able to do that with this particular client by simply just doing some analysis on their numbers that they don't do throughout the year. The owner has said to me on many occasions, I golf with him, and that he really truly looks forward to the visit every year. And I think other situations may not play out like that. I don't think everybody looks forward to seeing their accountant, but I don't think he views us as his accountant. And I think that's why he looks forward to it. And he often jokes with me. He says, I'm really looking forward to hear what your firm thinks of how I did. I want to get my report card and understand, how I did for the year, because he just doesn't get that feedback throughout the year. So we've been able to make a real difference just delivering that insight, delivering that information, and doing that analysis at the end of the year, which has led to other services for our firm. And we've done, and this is not a big client, and we've been able to grow the wallet share and the relationship quite a bit by doing other non-compliance type services like estate planning, succession planning, and just helping them manage their wealth, and including not only the owners of the business, but other family members. So there was a word that Donny used earlier that I like, which is stickiness, and I truly think that our relationship is very sticky, and I think it would be very difficult for our client to make a switch because of our relationship, and I think a lot of it's because of these other services that we've been able to deliver. So just to recap, just in terms of the benefits for our client, they're getting more from us. We're doing analysis. We're getting away from the tax returns and the financials, which quite honestly, and they even told us this, they don't look at them. They don't read them. It doesn't mean anything to them. And then the other, I think, big thing is, I'm just going to skip around here a little bit, is just the financial literacy of our client now. A lot of our smaller businesses are very focused on P&Ls. They don't understand things like liquidity. They don't even look at the balance sheet and don't really understand why it's all that important. I feel as though after working with this client the past several years, they have a much better understanding of financial statements in general, and they make a lot more sense to them in terms of understanding performance and how their business did. And I truly think that we've been able to allow them to grow in ways and increase the value of the business that they wouldn't experience without us. And then just in terms of the benefits for our firm is that we've got better retention. I worry less about fee pressure. We have a very good fee that we charge, and I know that there are competitors out there that will charge less, but I know that our relationship is viewed differently. So I think our retention for this client is much better because we're able to do these other things. And like I said earlier, it's driving growth in other areas of our practice, and we're able to deliver more services for this particular client. So that's it for me, and hopefully I didn't talk too fast and got the point across, but feel free to reach out to me with any questions. I believe my contact information is on the next slide.
My thanks to both of you. And what I really wanted, it was kind of implicit in what they were presenting. What I wanted everyone to be able to see that it doesn't have to be a big client for you to really do this. And if you look at Mike's slide that's showing the arrow, I think it's a great way where you can see the progression, and that's kind of the progression as well in the maturity model slide of how you start to, you don't just jump in and automatically do the big things. There's a progression that you can go through that will make sense, that allow you to learn as you go along. So a lot of great value proposition, and I know that we're already over time, so definitely happy to pass this back to Jessica, and you've got all of our contact information if you have any additional questions.
Great, thank you to all of you. So I'm sorry that we carried over. I'm going to go ahead and just ask one last poll question, and then Donny, I'm just going to go ahead and ask you just one question before we wrap it up for those that would like to stay on. So probably just another 3 minutes, and then we'll go ahead and we'll end this presentation. On the screen right now, this is just some resources that we put together here at SageWorks. We have a white paper that is on the same topic as today's webinar that's called Tapping Business Intelligence. It's to help your clients and your accounting firm grow. We also have an infographic, Unlocking Business Intelligence, that is along the same lines as today's webinar as well. And then we do invite anybody that's on here, if you haven't already, to join our LinkedIn group. We do offer a group that's more around business advisory services. So please feel free to check that out at that link there. So the last poll question that I'm going to show is more on ProfitSense, to see if you would like to learn how ProfitSense can help you use business intelligence with your clients. So I'm going to go ahead and get everybody just a moment here. And then Donny, I'm going to ask you just a question, and then we'll go ahead and close out today's webinar.
Why don't you go ahead and ask the question while they're finishing up the poll?
Absolutely. And so the one question I'm going to go out in here is, doesn't doing this advisory work breach my independence requirements?
I think one of the great things, if you look through all of it, nothing in there where you're doing management decision making, and really at this point you really are advisory. So it's a careful line that you have to actually take to ensure that you're not crossing that line. But John or Mike, do you guys have any comments about the independence issue?
Yeah, no, this is Mike here, and you know, that question comes up all the time, and I actually lead our client accounting services practice, and you'd be surprised. It is a fine line. You have to be careful, but the general answer is, as long as you're not making management decisions, you're most likely not going to cross that line. The rules get a little bit more complicated if you're dealing with SEC-regulated clients, and they're much stricter. But for non-SEC clients, you know, we're able to do things such as implement new ERP systems for those clients without impairing independence. So there is a lot of flexibility there, and I think it's more than people may think. But it is something that you certainly want to make sure you double check on.
Okay, great. And for Mike and John, I also had a couple of people that had asked for your contact information, and so if it wasn't on the slides, if you wouldn't mind sending that over to me. For those that have asked, if you don't mind them reaching out to you, I would love to share that information with them to ask a few questions for you.
No problem.
Great. Okay. Well, again, I'd like to thank everyone for joining. Michael, John, Donnie, thank you so much for your presentation. It was a lot of useful information. I did have a couple other people that responded as well that they really want to add business intelligence into their firm. And so I'll make sure to get that over to you guys so that way you could assist in that. But other than that, please feel free to send me any questions, and then just look for an email that's going to be coming from me that will have a recording of today's webinar along with the slides, and then also the white paper and the infographic will be included as well. So I hope everybody has a great day, and thank you so much for attending.
Thanks, everyone.
Thank you, everyone.